All right, here's a partnership simulation on partner basis. And they're going to ask you, what is the partner's basis after assets are transferred from partnership to partner? Here's the facts. Langford Partnership consists of 3 equal partners, Lang, Ford, and Doe. The partnership owns a building with a basis of $200,000, fair value of $750,000, and the partnership decides to transfer the building to partner Lang, who has a basis for his partnership interest of $300,000. Before the transfer, the partnership is not being liquidated, so it's a normal distribution. And question 1 wants us to calculate partner Lang's basis in the partnership immediately following the distribution. So the facts tell us that Lang's beginning partnership basis is $300,000, and then an asset is getting transferred from partnership to partner Lang. Assets come out of a partnership. Do they come out at basis or do they come out at fair value? They come out at basis. So that means we'll subtract $200,000 from Lang's beginning basis and Lang's remaining basis in the partnership, $100,000. So that's sort of simple, I guess, but make a note, if you didn't already have this, that assets come out of a partnership always at basis, never at fair value. And this sim, I designed it so it'll get a little tougher as we go along. But that was number 1, just to get us in the mood for partnership sim with distributions and how to calculate partner basis. All right, similar facts now, but not exactly the same. Let's see what's different. Langford Partnership consists of 3 equal partners, Lang, Ford, and Doe. The partnership owns a building with a basis of $500,000, fair value of $750,000. So we could see what's different. In this one, the basis of the building to the partnership is $500,000. In the previous, it was $200,000. So this time the basis of the building is a lot higher. It's $500,000. Fair value the same, $750,000. The partnership decides to transfer the building to partner Lang again, who has a basis for his partnership interest of the same $300,000 before the transfer. And the partnership is not being liquidated, so it's a normal distribution again. So everything's the same as the previous, except the basis of the building to the partnership is a lot higher. And they want us to calculate partner Lang's basis in the partnership immediately following the distribution. So Lang's beginning basis, again, $300,000, just like last time. But this time, the basis of the asset coming out of the partnership is $500,000, and we're going to apply that $500,000 against this basis of $300,000, and we're going to wind up going below 0. Can we do that? No. No, basis cannot go below 0, which means Lang's basis in the partnership immediately following the distribution is going to be 0. So the answer to number 2 is 0, because the remaining basis in the partnership can never go below 0. And maybe you knew that, and that's good. But here's what they could also ask you, so be ready for something like this. What if they would have asked, how much gain does partner Lang have on his individual 1040 as a result of getting this asset, $500,000, when his partner basis was only $300,000? Is there any gain to Lang? No gain, since no cash was received. Remember, in a partnership distribution, the only time you'll have a gain is if the cash received is greater than the basis. The fact that the asset's basis was greater than his partner basis does not trigger a gain. But it did bring his partner basis all the way down to 0. So, what else could they ask you here? Besides asking you if Lang has any personal gain here, and you'd say no gain because there's no cash being distributed to him. The other thing they could ask you is, what's Lang's basis in this building being received today? Is it $500,000? And it would have been had there been enough partner basis. But because there's not enough partner basis, there's only $300,000 available, then that's going to be Lang's basis in the building. So if Lang goes to sell the building, Lang's going to have a $300,000 basis in the building, not a $500,000 basis in the building. So what we always try to do here is anticipate the next question based on the question that we're looking at. So we're anticipating they could ask you how much gain. You'd say no gain today because cash isn't being received. But if they said, what's his basis in the building? It's limited to $300,000. because that's all the basis that was available. And the question they did ask, which was calculate partner Lang's basis in the partnership immediately following the distribution, he's got no basis left in the partnership, right? He has no basis left in the partnership after this asset is transferred to him. But notice the fair value 750 never came into play, because when assets come out of a partnership, they come out at basis, not at fair value. All right, similar facts. Langford Partnership consists of 3 equal partners, Lang, Ford, and Doe. The partnership owns a building with a basis of $500,000 again, but this time it's subject to a mortgage of $360,000. And the partnership decides to transfer the building and the mortgage to partner Lang, who has a basis for his partnership interest of $300,000 before the transfer. The partnership is not being liquidated. This is a normal distribution. And they want us to calculate partner Lang's basis in the partnership immediately following the distribution. Now, it makes a big difference that this asset is subject to a mortgage, because when it wasn't, we just subtracted the $500,000 basis from Lang's $300,000 basis, and we said that's going to zero out Lang's basis in the partnership. But let's see what we do now when there's a mortgage on this building being assumed by the partner. So once again, we start with the beginning basis that Lang has in the partnership of $300,000, but this time with this mortgage, we're going to add the assumption of the mortgage to Lang's partner basis. So that's going to bring Lang from $300,000 up to $660,000. That's Lang's basis in the partnership for a moment. It's up to $660,000. Then we're going to distribute the building with a $500,000 basis, and that means Lang's going to be down to $160,000 for a moment. And let's leave it there for a second. As we review what we just did, we started with Lang's basis in the partnership, $300,000, and we added that full $360,000 mortgage that is being assumed by partner Lang, and we're up to $660,000 basis in the partnership before we subtract the building's basis of $500,000 and bring Lang down to $160,000. So write down on a piece of paper, Lang's basis right now $160,000, and now we have to take a look at this last item here. Lang's share of decrease in partnership liabilities, $120,000. And this $120,000 decrease relates to the fact that $360,000 of total partnership liabilities are being transferred out. Right? This $360,000 was a partnership debt. It's being transferred out of the partnership, and Lang himself is going to be responsible for this mortgage, no longer the partnership. So each partner is going to have a reduction in basis due to their ownership percentage of these partnership debts that are being reduced. 1/3 of $360,000, or $120,000, is going to be a reduction of Lang's basis, but not just Lang. Each partner is going to see their basis cut by $120,000 as a result of this mortgage of $360,000 being transferred out of the partnership, because Lang is assuming this mortgage personally. So each partner is going to have a reduction of basis due to their ownership percentage of these liabilities being transferred out. So subtract $120,000 from the $160,000 that we had written down, and we're down to $40,000, and that's Lang's basis in the partnership after the distribution of the building and the mortgage. This kind of question here, number 3, if you get a sim on partnerships, could easily be there. Might be a little tough for multiple choice question, but could definitely be something as part of a sim. Notice how we did it again. We added the liability that was assumed by Lang to Lang's partner basis. We brought him up to $660,000 from his original $300,000 basis, up by $360,000, up to $660,000. Then we subtracted the building's basis of $500,000, and we're down to $160,000. And then we have to remember, oh yeah, the total partnership liabilities have gone down by $360,000. That impacts each partner's basis. So we're going to take $120,000 away from Lang's basis and bring him down to $40,000. All right, same facts. Let's see what they want this time. Langford Partnership consists of 3 equal partners, Lang, Ford, and Doe. The partnership owns a building with a basis of $500,000 again, subject to a mortgage of $360,000 again. So everything's the same. The partnership decides to transfer the building and the mortgage to partner Lang, who has a basis for his partnership interest of $300,000 before the transfer. everything's the same, right? The partnership is not being liquidated, so it's a normal distribution again. So what are they going to ask us this time? All right, this time they're saying about partner Ford. If partner Ford had a basis immediately prior to the transfer of $300,000, what would be partner Ford's basis in the partnership immediately after the transfer of the building to partner Lang? So now they're asking about partner Ford, not partner Lang, but Lang's still getting the building and the mortgage. So partner Ford's beginning basis was $300,000, they told us, and then you might recall from the last problem, number 3, that each partner is going to have a reduction of basis due to their share of this mortgage of $360,000 that is being relieved of. The partnership is no longer in debt for this $360,000. It's now a partner debt. So that's a reduction in partnership liabilities. Each partner gets a reduction in basis for that. And that's going to bring partner Ford's basis down to $180,000. So this $120,000 reduction of basis we said is going to apply to each partner. We saw it for Lang. Now we saw it for Ford. Each partner is going to have this minus $120,000 because of the $360,000 reduction in overall partnership liabilities. So you've got to know that when partnership liabilities fall, partners' basis goes down by their proportionate ownership percentage, in this case 1/3 for Ford. So Ford's basis after this transfer would be $180,000. So Ford's not getting the building and the mortgage, Lang is, but they're asking about Ford. What if they asked about partner Doe, right? The third partner. Doe's not getting the building, not taking on the mortgage either, but Doe would still have this minus $120,000. So if Doe's basis started out at $300,000, then Doe would end up at $180,000, just like Ford. All right, let's give it another little twist. Langford Partnership consists of 3 equal partners, Lang, Ford, and Doe. The partnership owns a building with a basis of $500,000 subject to a mortgage of $360,000. The partnership decides to transfer the building worth $750,000, and the mortgage also gets transferred to partner Lang, who has a basis for his partnership interest of $300,000 before the transfer. The partnership is not being liquidated, so it's a normal distribution. So this is similar facts, almost exactly the same. The only thing new here is they once again brought back that the partnership building is worth $750,000, and it's now being transferred to partner Lang. So what are they going to ask you? It says, how much gain or loss does the partnership pass through on the K1 to partner Doe as a result of transferring the building and mortgage to partner Lang? So once again, Lang's getting the building with the mortgage on it, but they're asking this time about partner Doe and how much gain or loss is the partnership going to pass through onto the K1 of partner Doe. Is there a gain? Is there a loss? And this involves you remembering that when assets come out of a partnership, they come out at basis, not fair value. Therefore, no gain or loss to the partnership, nothing to pass through on the K1s related to the transfer. There's no gain or loss to pass through to partner Doe or partner Lang or partner Ford, because this asset will come out at $500,000 to partner Lang, and there'll be no gain or loss to anybody, not to the partnership, not to any individual partners. And that's the advantage of partnerships, is when assets come out, they come out at basis, not at fair market value. So we never really had to deal with this fair market value the whole time because it just wasn't relevant.